It's Thursday, October 23rd, and here's everything you may have missed in business and finance yesterday. Yesterday was a day of retreat for U.S. markets, reversing some of the momentum we've seen recently. Investors were busy digesting a mixed bag of corporate earnings and new concerns over U.S. China trade relations. All three major U.S. indices finished the day lower. The S&P 500 fell over 0.5%, closing just under $6,700. The Dow Jones dropped 0.71%, sliding from its record close on Tuesday, and leading losses was the Nasdaq Composite, which fell 0.93%. Smaller companies, as tracked by the Russell 2000, also took a hit. They were down almost 1.5% as a risk-off sentiment took hold. Earnings and trade were the major market drivers. Looking at earnings, Netflix stock tumbled more than 10% after its quarterly earnings report missed profit forecasts, partly due to a significant one-time tax expense. This disappointing result weighed on the broader communication services and consumer discretionary sectors. Meanwhile, the semiconductor industry faced pressure after Texas Instruments issued lukewarm guidance, falling over 5.5%. It wasn't all red yesterday. The corporate earnings season did still deliver a few winners, one of which was Intuitive Surgical, which surged over 14% on the back of strong quarterly results. In one of the more eye-catching moves, the so-called meme stock Beyond Meat soared, adding to an already incredible weekly gain following news of a major expansion with Walmart. Of the 11 major sectors in the S&P 500, industrials fell the most, with energy enjoying the biggest percentage gain. Trade was top of mind yesterday. Again, markets reacted negatively to news reports that the White House is considering new restrictions on exports to China, specifically targeting products that contain U.S. software. This rekindled fears of an escalation in trade tensions. Precious metals continued their recent pullback. Gold prices fell for a second straight day, extending its slide from the recent record highs as investors continue to unwind this massive run-up in safe haven assets. In the broader economic context, we're still operating under the shadow of a prolonged government shutdown, though markets are currently more focused on corporate performance. Also notable yesterday, the 10-year U.S. Treasury yield eased slightly to around 3.96%. Today, all eyes will be on electric vehicle behemoth Tesla, which reported Q3 earnings after the bell yesterday, while Tesla reported a return to growth revenue with sales beating analyst expectations, a feat that was helped by a rush of customers trying to claim a now expired U.S. EV tax credit. The company's profits still fell sharply, missing Wall Street forecasts for adjusted earnings per share. This marked the fourth consecutive quarter of profit decline, and in after-hours trading, the stock immediately dropped over 3%. T-Mobile, Intel, Honeywell, and Blackstone all report earnings today, along with a slew of other names, so today certainly will not be a boring day in the market.